Let's take a look at your markets now. Now, sentiment pretty sour today. The JSE got a downbeat handover from Asia. We can see that just filtering through onto local markets. Traders trading carefully today as they digest economic data. Here at home, we had disappointing manufacturing numbers with the ABSA PMI still in contractionary territory. And then internationally, disappointing labor numbers out today, spooking investors. Traders are also awaiting Fed minutes, which will be released tonight. Now, with that, we are seeing the all share down just over 1%. The Financial 15 taking the biggest knock there, losing 1.6%. Industrial 25 down almost 1.5%. The Resources 10 complex backing the overall trend there, up just over 0.6%. And joining me for further analysis on the day's markets action is Andrew Padoa from Sasfin Wealth. Andrew, thanks so much for your time today. So Trump really dominating headlines throughout this week. There's been a lot of conflicting reports. Earlier in the week, the Washington Post reported that Trump and his team are looking at a narrow approach when it comes to tariffs. Trump did refute these claims, but now recently we had another report from CNN where they said Trump is considering a national economic emergency declaration to allow for new tariff programs. This, of course, just weighing on sentiment, and we can see that, you know, trade really choppy today. I guess this is a result of the uncertainty that's just playing out right now. We don't know what he's going to do, and we're just waiting tentatively.
Yeah, I think that's fair. Well, firstly, thanks so much for having me, and Happy New Year to you and all the listeners. I think Trump loves a bit of drama, doesn't he? And it's now a wait-and-see approach. What we've seen with these Trump, the tariff comments and the threats, is bond yields in the US have been spiking higher, and that's kind of what's driven markets the last 24 hours. So the 10-year, US 10-year bond yields, you know, edging towards 5%. That's put equity markets under pressure, especially the longer duration types of equities like your Nvidias, those types of technology stocks where a lot of cash flows are going to come from, you know, way out into the future. Chinese markets also not getting off to a great start, and we need the Chinese to kind of be firing on all cylinders for us to be doing well. So not the best start for 2025, I'm afraid.
I guess we're in for a long 4 years, right?
Yeah, I think 2025 is going to be a year where markets are not going to be as good. So, you know, in the US, we've seen 20% plus returns for 2 consecutive years in a row. This is only the 5th time in history that has ever happened. And every single time after that, you've actually had negative returns for the following 2 years. I don't know if we'll have negative returns in the US, but I don't think we're going to get those 20% returns. So I would expect lower returns, but a lot more volatility than what we saw last year.
Another aspect that's been, you know, fueling some jitters in markets are those inflationary pressures, right, that may come with the tariffs, right? Which brings me to my next question around monetary policy, Andrew. We'll be getting, you know, further insight into policymakers' thinking behind the December rate decision when those minutes come out later tonight. But ahead of that, we do know that the Fed is taking a more cautious approach when it comes to rate cuts this year. What are you pricing in? Because I was reading an article and one of the analysts was like, they're pricing in only one rate cut for 2025. I don't know, that's like a big difference from what we saw last year and, you know, the commentary that was coming from the beginning of last year. It just seems like a big change.
Yeah, I think the Trump tariff threats will definitely give the Fed a headache. You know, the Fed, you know, they need inflation to be coming down to continue to cut rates, and tariffs are inflationary, so it's causing a bit of a dilemma for them. But you know, the Fed really slipped or dropped the ball in 2020, 2021, 2022. They just took far too long to raise rates, and they let the inflation, you know, dragon out of its cage, and that's kind of what happened in 2022. We had to very quickly raise interest rates to bring inflation under control. So I think the scars from that occasion still are very much, they remember, and I think they're going to be cautious to bring interest rates down. They're not going to be in a crazy hurry. So I think we're going to see gradual rate cuts, data dependent, obviously, but maybe 2, maybe 3. Nothing more than that, I don't think.
talking about that data, we do know that the Fed has a dual mandate, of course, making sure that they tame inflation, but also making sure that the labor market remains resilient. And we had the ADP numbers out today, private sector job creation easing in December. Companies are adding 122,000 jobs, down from 146,000 in November. How concerning is this print, considering that, it kind of gives us clues and hints into that all-important non-farm payroll print out on Friday?
Yeah, I think the bigger one will be on Friday. But this labour statistics, it's weaker than expected. What was quite interesting is that we've seen manufacturing shrinking for 3 consecutive months. I think it's something for the Fed to be paying attention to. But let's wait for Friday and then we get our non-farm payrolls.
All right. And on the back of that, just the economic data that we've seen play out in the States, we've seen the rand really under pressure today. I think the last time I checked, it was nearing 18.19 to the dollar. Yes, we've had, that downbeat PMI print, but I guess, it's really that king dollar strength weighing on the rand, right?
Yeah. So I went on leave early December and we were at about 17.70. And now, here we are, almost 19 to the dollar. So the rand strengthens slowly, but, it weakens very quickly. I think the rand's going to remain volatile in 2025, along with other emerging markets. With Trump there, the dollar's likely to be strong. The tariff threats and all that, it's going to be volatile for currencies such as the rand.
So Trump aside, rand aside, what is your stock pick? We have about 30 seconds.
Sure. So there was a Coca-Cola Christmas advert at the end of last year, released typical advert, but one major twist, it was completely AI generated. Cost 1/10 of your normal production cost. Took 6 people 4 weeks to make it. And it's a great example of how Gen AI is being used, and we're only scratching the surface here. So Meta is my stock pick. They're probably one of the best positioned companies to monetize the generative AI, and that's why they are my pick tonight.
Meta wants to look out for. Andrew, thanks for your time and taking us through the day's markets action. That was Andrew Padoa from Sasfin Wealth.